welcome back to another weekly trading show. My name's Josh. I'm so glad you're here. Scott Landers is with me. We've kind of got a good thing rolling here, don't we, Scott?
Yes, we do, sir.
This is always a highlight of my week. I get nervous if that's kind of weird to get nervous, and I'm just realizing, oh, you are on the screen there. I get nervous on Wednesday night, and then by the time Thursday rolls around, I'm like, I can't wait to hop on this show and see what Scott has to say, because I always learn something from you. But hey, I went through the disclaimer there pretty fast. I'll put it back up and make sure we all are on the same page. All of you from the Securities Exchange Commission, make sure you read this whole thing. This training is for educational purposes only. All examples and analysis are intended for that purpose and should not be considered as specific investment advice. If any time you don't feel like you've been fully disclaimed, you can pause this video, go back to the beginning, and reread that from top to bottom. We are here to educate. We're here to inform. We're here to help you make intelligent decisions, but we're not here to trade on your behalf. Everybody's risk management parameters and strategies are unique to them. So we're going to share with you guys kind of our perspective on the world and on the market, and then you guys are going to apply that to your trades. So, Scott, we last week we came in with little prep. This week I think we came in with even less prep. You have no idea what I'm about to throw at you.
I don't.
But you're going to be fun. You're going to hit it out of the park, aren't you? Brother, I would love for you to speak to, because I think there's none better than this than you, the fact that we had such a divergence between the Dow and the Qs this morning at market open. It was shockingly so how aggressively bullish, I know you love that word, the Dow was, how up it was, and the Qs had gapped down. I'm going to just go straight to you here and publish your chart and let you talk about that.
Yeah, absolutely. So one of the things I told the Traction Group this morning, and I'm marking this chart up because we talked about this chart actually last week. I know we've got a lot of earnings going on. I think we got Apple and Amazon after the close, I think, today on top of that. And then we got economic data, and the market has shifted recently. We've seen this kind of coming together. So when I look at divergence, one of the things that gets me immediately out of the gate is the opening range. It gives me a way to immediately size up, and I'm using a 30-minute opening range for anybody who's familiar with this concept. So if you'll look at the gap this morning, and the comment I made into the Slack group this morning was mind your slopes coming out yesterday afternoon, because there's a natural tendency that price wants to pull back in the primary direction it was going in. And so when you see this, if you'll notice which one of these doesn't belong like the others, which one doesn't open exactly like the rest of them did. And it's not hard if you don't even need opening range to do this, guys. You just need to know where yesterday's highs and lows are if you want to do that. So here's the diamonds where we open, right? Look, we open rolled yesterday's highs. Now look at where the Qs are opening, literally against the lows of yesterday's afternoon sell-off. Where are we opening, by the middle of the range in the S&P? And then the small caps are basically the same thing. These are the Market Watch 4 charts. I've taught these for 2 decades, and I still have students from the beginning of when I started helping people. This was the thing that stuck with them the longest. It seems like it's still part of their, approach today. It doesn't matter if you're doing a 5-minute chart, a tick chart, or a monthly chart. You can get value from looking at the market just in this simple fashion, because it's such a good cross-section of the broader market. So when I look at this morning, my whole point was mind your slopes from yesterday, and then you have this divergence right out of the gate with the diamonds with where they're opening because of earnings or whatever it might be. So that's what caught me this morning. Immediately looking for there is a disconnect between where it's trying to open and the others. And the thing I've talked about with this over the years, and I'll just use the NASDAQ to do this, a lot of people don't understand that when you have, that's not what I want, Scott. When you have stocks all going the same direction, same levels, same zones clearing, it's really easy for everybody to move north or move south. But when you have one that is divergent to the other 3 are like, what are we doing? Why are you going that way? It's like you stop to take a pit stop. The rest of us are busy. We want to go do something, and you're getting in the way. And so you could do this with 4 individual stocks like Goldman Sachs, Morgan, JPM, and say XLF, and compare those. You can do this with any number of sectors. But I always go back to the Market Watch 4 because it's such a good cross-section. With that said, if they're all four trying to go north or south, it's pretty easy. If two of these are trying to go north and the other two are trying to go south, and they were all holding hands, what do you think is going to happen here? If this was Josh's family and Josh's wife were going north and the kids were heading south, okay, and they're holding hands, they're going to go in a giant circle. Now, if there's more kids than mom and dad, they may pull mom and dad tugging a little bit, right? Trying to pull them this way. Well, what happens when the kids let goes of one of their siblings' hands and runs away? Now the whole family has to go get it. That's what you see happen this morning. You have a market that's like, wait a minute, are we going north, south? Well, the diamonds want to go higher and everybody else wants to, go south at this point. That's where prior slope comes into play. And this is playing out pretty textbook today of what we would normally expect. So that gets to that. I want to add one more thing, Josh, before we shift here just for a second or get back. I mentioned this last week in the YouTube show, if memory serves me right. The great thing about opening range, long standing being used in the industry, works really well. These are 30-minute opening ranges. Okay. If you'll notice the arrows, I'm not trying to tell you directionally that we're going lower or higher necessarily, as much as it was a failure to close through your 30-minute opening ranges and follow through. And there's a simple mathematical formula to the opening range. Whatever the length is, divide by 2, and that's the amount of time you need to stay outside of the range to confirm it. And if you'll notice, day after day with the down arrows, we failed to fall through until we get over here. Breakout, retest, and since then, you've gone higher. And I'm pretty sure I addressed this last week in YouTube. I know I have in the traction groups and all that. The point was, if you use just the 30-minute opening range, not only does it give you targeting the way I teach it, but it gives you the ability to sit here and see a shift in trend. Well, we've had a pretty good run the past few days, and we've had actually a pretty vertical run that needed to walk over and slow down a little bit, breathe a little bit like we've done today, past couple days probably. But just in the opening range, you can frame this out. Any of you can do it. You don't need the pretty color code on the charts to do this. Just mark a box after the first half hour of the opening bell. Last point, if you're trading a 24-hour market, you're trading currency, you're trading ES, you're trading some foreign market, is a 24-hour market, or you're in another part of the world and you're just trading that market. Whatever your domicile market is, their open is, so to speak, when they typically open, you need to build your opening ranges from there and then work from that standpoint. So I hope that's helpful. If questions, please reach out and let us know in the chat.
Yeah, that's a great point on the chat. We want this to be as interactive as you guys want it to be. We can stand here and talk about whatever we think is interesting all day long, and maybe that's interesting to you. I'd rather talk about, as long as it's on, it's not completely off topic, I'd rather talk about what you guys find interesting. So if you've got a stock or something that you want us to look at, or you've got a question on how we're seeing something, please type it in, and we'll be sure to include that in the broadcast, time permitting. But I think that we should have time today. I want to expound a little bit on why I see the market pausing. And if you saw the thumbnail, oops, we lost Scott on this page. How do I bring Scott back? Yeah, you're not on my screen, Scott. You can go blow your nose now if you need to, or do something moderately embarrassing like that. I don't have time. This technology is all new. And it's amazing. It's called Ecamm, for those of you that want to get into the YouTube streaming world. And it's very, very powerful, but I feel like I don't quite have the process down yet, and I must not have clicked one of the buttons that needs clicked, so Scott disappeared on me. But what I wanted to talk about is the Fibonacci box. So Scott talked about the slope that we just experienced, and slope is one of Scott's jams. And if you're a traction student or a traction pro student, you guys have talked about slope a lot. That blue arrow I just drew on your screen, it looks a lot like kind of this slope that we had back here in July going into August. And we were saying at the time that was unsustainable. Everybody was looking at this thing saying, did somebody fill the stock market with helium? I mean, we were just going all the way on up. So it's not surprising to me that we slowed down. It's also not surprising to me that we slowed down where we slowed down. So we said last week, go back and check out the video. I encourage you to watch all of our old videos, even if it doesn't apply to the stock market that day. The training and the content that we're putting in there is extraordinary, and you can apply it to markets going forward, and you have the benefit of future vision. If you're watching a video from last week or 2 weeks ago, you can see what the market actually did, and if we're full of crap or if we actually know what we're talking about around here. I think you'll find the latter is most often true, although sometimes, my eyes aren't brown for no reason. I'll let you put two and two together there. So we were talking about fibs last week, and if I've said it once, I've said it 100 times, but for those of you that are new, as long as we trade to or within, but not above this red box, that means I must maintain a bearish framework in my bias. I've said two words there that gave Scott the shivers, but you can't see him because he's not on the screen. Bias and bearish. The way that I look at the market, ultimately, I have to pick a direction. Which way am I going? And for me, I have benefited when I remove possibilities. And right now, it's not necessarily a possibility for me to go look for any kind of a long-term bullish trade because we've not exceeded this red box. And as far as my framework is concerned, which I'm happy to teach you all about, until we get out of this red box, I just don't go looking for bullish trades. I look for ones that are already set up bearish because the market has not shown me that it wants to go higher. Now, check this out. If we pull up our fibs here, I want to first come back to this red box because notice how we top tick this red box right there. They don't always work out that smoothly, but that was pretty awesome. I mean, I think we nailed that one to the tick. And again, you can go back and start watching videos in September. Woo, that is a lot of lines I didn't mean to draw. Watch videos in September or late August. That's about the time I was drawn, actually right where this bottom happened. So probably Thursday the 8th. If I was a guessing man, I'd say the YouTube show we did on Thursday, September 8th, we drew that red box in there and it nailed it perfectly. And so I want to learn from the past and say, what candlesticks were we measuring that gave us such a solid box? And it looks like that's pretty close. This white candlestick right here, normally I mark these with flags, but I didn't this time. And the top of this dark box up there. So let's actually just do that. I'll mark it with a flag while we're thinking about it here. Because I'm going to use these points going forward. Now we can come and say, we've kind of got a general idea of where this red box should be, but given yesterday's peak, is there anything that lines up there that would start to tell us that perhaps that was a resistance point? That was a good framework that we should be looking at. We're close. In this red box, close is good in horseshoes, hand grenades, and market biases. But let's come back here. I'm using the same candlestick with the green mark, and then starting down here at this mega gap down we had when the inflation news came out. And you'll see the green line goes right through the top of that S&P 500 candlestick yesterday. To me, that's a new insight that says we're on the right track. We might come up to the top of this box, but the market is testing this price point, 387 on SPY. It's testing that price point, and that means that I should also respect that price point. So I'm going to move this box just a smidgen to grab the top and the bottom of those green lines. That's my updated red box right there. And we'll see what happens, whether we shoot up to the top of it or if we just come straight on down from there. Now we can also start looking at things from the opposite perspective. So again, there's always two frameworks at hand here. And I'm sorry, I'm talking a long time, Scott, but this is going to be helpful. I drew my own matrix wrong. So the way this matrix works, during a bullish market, there's things that should be happening. That's the check mark. And there's things that should not be happening. So let's start with the bearish market. The bearish market, there's things that should be happening and things that should not be happening as well. So if we come back here, and I think this is magenta, but you'll get the point. In a bearish market, we can trade to or within, but what's the kicker here? We should not be trading above the red box in a bearish market. Same thing is true in a bearish market-ish. Let me find my green pen here. That is not green. There's green. You can see the green box over here. If we were in a bullish market, we should trade down to or within, but not below the green box. So the question is, where's the green box? If we're fixing to set up, that's a Southern term, by the way, fixing to. If we're fixing to set up for a new bullish market and, the stock market is going to save the midterm elections and everybody's going to get elected because we're back bullish again, where should that green box go? I'll leave this on the screen and start drawing over top of it here. If it gets too much, I'll delete it. But given what we know right now, and there's not much, we probably would need to update this. So I'm going to just go from the most conservative. What would that be? I wish there was a little bit more to go off from. I'm going to go off from yesterday's gap down. I don't think it's the best candlestick we have, but it's a candlestick that we have. I think we probably need some new information. That'll come in the next few days, I'm sure. Don't need such an aggressively long green box. Now, I don't want to create analysis paralysis here, but as long as we trade to or within, but not below that green box, then we could bounce around and come on back up. That's a possibility for sure. In between here, whoops, I deleted that all. Hopefully y'all got a screenshot. There's a lot of action that could happen. I am maintaining the larger framework. So if you think of fractals, that's the larger downtrend. If we zoom out, I'll maintain that perspective. I'll be candid. Most of my trades right now are bearish unless it's an inverse ETF. I've got one that's bullish on an inverse ETF. But I'm looking at this as, I think we'll come down at least and check out this green box if we don't even go below it. There's several people that are advocating for the constellations. That's not to be confused with celestial analysis. But the metaphorical constellations, if you will, are aligning for another wave on down. That's speculation and kind of outside the scope of what we're talking about here. But that's what I'm looking at on the S&P, and there's some interesting targets for you. Scott, I will come back to you because that was a lot. Are y'all doing okay out there in YouTube land? I don't think I see any questions yet. But we also didn't lose anybody.
Great. I think that's good. I like what you put on there. One of the things we've addressed in traction is just if you look at the way this pattern has started to shape up is when it does pull back, you need to expect a pullback. You will get a pullback. I mean, that's just the natural ebb and flow of the markets. That's where it becomes really important what happens there. That becomes the inflection. Statistically, guys, we're moving into, not my opinion, the statistics prove this, the strongest 6 months of the next 12 months. So something to bear in mind as we go forward right here. So we got an election. We clearly have to deal with all the other concerns. I know that some of the biggest names on Wall Street, Jamie Dimon being one of them, is constantly talking about recession in 2023. So we are in what I consider to be the consolidation zone right here. The easiest way to think about this, if you look at a channel, you find the midpoint of that, which is this. I'll make this line yellow so everybody sees this clearly. And I do that same thing up here. And we've looked at this before. Well, if you agree that this is its own channel and this is just doubling it, well, then where's the middle of it? And you can see where we're struggling back and forth through here. We're in that congestion zone. This is not 2 a.m., driving on some interstate in Nashville where nobody's around. It's like 5 o'clock traffic is what you're dealing with right here. You like that one, didn't you? Since I haven't been in Nashville.
See how you work that in there. You haven't been in Nashville in a while, though, because it's never empty in Nashville. The whole world has moved here.
That's what I thought. But for, say, Birmingham, conversely, even though Birmingham's picked up lately and knows some traffic in the wee hours, the idea is 5 o'clock traffic, guys, versus a lower traffic period of time. And people say, oh, it doesn't matter. When we went through this live back in June, the June lows, I made the point then that if you were a day trader and you saw the same pattern as we're coming in here, you weren't even a 50% retracement. And if you think about this logically, what happened? You had a nice reversal, went long, whatever the case may have been. If you look at the most recent run in the market, and you just take your retracement low to high, not this is a big surprise, but where's 50%? Pretty much the tick, close enough, right? So we're having a nice move up, right? And so we're holding support. The bigger question is, not only am I at 50% of the fib retracement, I'm also at 50% of what? That midpoint of that bigger channel. And a lot of you are like, yeah, it's a monthly chart. I don't care about all that. Well, guess what? The market will care about it because it's all a fractal. And everybody through Trader Traction will tell you, if you didn't understand fractals before, when I'm done with you, you have a whole new vantage point of looking at the markets differently. Bring this up because people ignore this, and all of a sudden the market will turn and it'll start to go higher or start to go lower. But you're in that inflection zone right here. And Josh has done a great job on the shorter term of trying to get you to look at it. And I'm going much more 40,000 foot view to help you see where we are in the bigger picture right now. Okay. So you don't have to look at the monthly, but it will help you get a good sense of where things are. In fact, this white line, that 384.28 level, is actually a near-term, short-term resistance level based off of preceding data that we talk about in traction. I bring it up because you're struggling at it, just like the one below it. So we're pretty much trapped between 384 and 367 in the short run of this right now for this period of time, give or take, something like that. So we'll eventually get out of this. Want to go back to November, though. The strongest 6 months, the whole thing of selling may go away. You buy the September, October swoon, you go long in November, and you hold till basically the end of, April. That is not buy, sell, hold advice. I'm trying to tell you how Wall Street has done this for a long time. There are strategies that will have you long from November to the end of April and have you flat going in those next 6 months. And the performance difference is quite significant if the data still holds all these decades later that I've seen. So something to think about. Earnings, as they say, it was the mother's milk to the market, so to speak, that we used to hear about all the time on CNBC back in 09. And so earnings are coming out. Big tech is going to have to adjust clearly how they want to make their profits, and so are the people. Watch for your leadership names. A lot of things are getting crushed lately. Other things are trying to rebound, but we are at that midpoint. When this gets resolved, the end result is when this gets resolved, guys, we're either going to recover and try to move back up and out of this, or as Josh said, potentially go on further down. A measured move of this would put us somewhere closer to, 335 and change. If the market does roll over from a wave count standpoint, you're still completing your fourth wave down. We haven't gone the fifth wave. You had 5 waves up. When we bounced back in June, we were 3 waves down. Till we get outside this thinner looking channel, we're not appreciably going to trend longer term, more macro. And if we do get out of it, then we'll pay attention at that point, make the decision, right? And again, that's longer term than most of you care about. But because it's a fractal, your daily is churning back and forth inside of that much bigger frame. Okay, I hope that's helpful.
Hey, I'm playing around with something over here. I always appreciate you pulling my perspective back out. What do you think about log charts with fibs?
Yes.
Okay.
Yes.
Tell me what you
I
think.
actually cover subtraction. So
You're my brother from another mother. All right. So this is what you were just measuring right there. And we're sitting at the 50% mark, correct?
Yes, sir.
So I gain a lot of insights from fibs when I start seeing things line up. And if we come out here back down to the 2009 low, when this is on a log chart, by the way, we actually start getting a confluence that lines up right about where you were looking. Confluence is always orange for me, which is confusing because my trend line is orange. So let me fix this. I don't know what kind of a seizure I had to.
It's the whole Tennessee thing.
Oh gosh. This is going to get us a lot of dislikes on the video, but I don't care. It'll help the YouTube algorithm. I seriously could care less about football.
I know.
I don't know what's wrong with me. I got dropped on my head or something. And so there's a confluence there. And confluence, for those of you that don't understand it, is where multiple Fibonacci lines, or really multiple lines of any analysis, start stacking. Now, I would not typically do Fibonacci analysis like this, but I thought it was interesting. There's a third confluence line that shows up. If I were to draw back to the peaks of 2007, 2000, those two peaks on SPY, I would not typically draw that line, but as I was just looking at this and playing with it, I thought it's interesting because it all is. If you've ever seen me teach fibs, and if you can see my screen here, I'm not doing a good job. I'll just draw it on the screen. Fibonacci analysis, in my opinion, is like figuring out graph paper, and once you know what the size of the grid is, then you can just
Yep.
move this thing over and move it up. And the whole thing is very, what's the word? Repeatable, geometric,
Fractal.
fractal. Yeah, that's the right word, fractal. So I don't think these peaks should be discounted, but I'm going to leave this on here. I mean, I'm doing this analysis in real time, but that's interesting enough to me that I'm going to leave that confluence on there because I don't think that happened by accident. Do you have any insights on that?
Oh, I agree with you. I think you Josh says something I'll make sure everybody understands, and we talk about this in traction pro all the time. When you have confluence, it doesn't matter where the confluence is coming from. If you have 2 or 3 items lining up and then price has a price reaction to the confluence zone, you need to pay attention to it. Like, you should not ignore that. And I've watched a lot of people in my career who will just, oh, it doesn't matter. I'm like, it's like somebody it's like Evan Man coming to your door and saying, here's your check. It is trying to tell you it's reacting to that. So you have found something at that cycle, that frequency, that fractal of time that is actually the market's respecting it. Well, if it does it then, it'll probably do it in the future. When will it stop working? Who knows? You'll know when it does because it won't hold that level. And so when Josh is doing this, and we're doing it in different ways today to show you this, guys, you want to have a healthy respect for it. Like, seriously healthy respect for it. Whatever you do, don't dismiss it. And I say that like a passion plea because I watch traders walk away for some really good opportunities as a result of that, sadly. So, yes, but
And
that looks good.
check this out. Actually, I don't even know. Can you see my charts like the way your
Yeah,
software works? Okay. I didn't know what you're able to see on your end.
I'm watching it through the stream. So it might be delayed, but I'm still seeing it.
But you can't see it
That's
through
how
the
we
software, huh?
No, not through software. I can see
That's
you through the software. I can see me in the chart, but I cannot see your stream off of that. But I
that's
can see it through YouTube. So I'm still seeing it slightly delayed, but we're good. I can see your charts. They look good.
So all I did was extend that orange line and look where it's connecting, guys. I'm back on a daily chart with SPY. And I'm not advocating for 320, but I mean it wouldn't be insane either. And you've got a nice support touch there. What was that, mid 2020, October 2020, almost exactly 2 years ago. Little support touch there. That was September 2020. And then, of course, a resistance when we had the V bottom correction. So I don't know. That's that and $5 will buy you a coffee at Starbucks right now and a quarter of a tank of gas and the large portion of our country. Maybe more than that. That's exaggerating. Three quarters of a tank of gas. Not tank. I mean a gallon of gas. Good night. Hey, I want to share one more thing before I toss it back to you, Scott, just because I guess I've decided to be a microphone hog today. In all the potentially bearish bias that I just spit out in y'all's direction, I want you guys to start watching this. Where was it? Nope. Not seeing. Maybe I wasn't on SPY. What was I looking at? The Dow? What I'm trying to get to, maybe it was on MACD on the Dow. I started seeing some bullish divergence. No, that's not it either. Dang it, where did I see that? I guess it was right here. And I don't know that this is anything. And divergence takes a long time to play out, y'all. It really does. But notice on MACD, we had higher lows. And on price action, we had lower lows. That's bullish divergence. And you'll start to see signs of that showing up before the market hits the bottom. I don't know what kind of bottom this is going to be. The last two major bottoms that we had, COVID crash and then the 2008 crash, both of those were V bottoms. We came in and we came out, and then we did a little head fake, and then it just took off. Um, there's no amount of technical analysis that's going to find a V bottom, unless maybe you're an intraday trader and you're watching it at such a tight fractal, But for us swing traders that are out there, you're not going to catch that. But as I started to squawk going into January, February 2022 and said, I see head and shoulders patterns everywhere. If you start to see divergence showing up everywhere while bouncing off these green boxes everywhere, that's going to start to offer confidence that maybe things are turning around and maybe we're starting to head back up. The other thing that you've got to keep in mind is the calendar. Not from the perspective that Scott was talking about, although it is the most positive, upward. I try to use words that don't give Scott's PTSD a
bullish.
trigger. Yeah,
Say it.
bullish.
Say it.
But do the research, and I may have it here when Scott starts talking. I'll see if I can pull it up because I went through and marked it on my charts. Just take notice of how long recessionary markets tend to last. And whether you believe, the recession started after the second quarter GDP contraction, or if, when neighbor finally decides that we're in a recession and that's when it starts. I mean, kind of the vibe of this thing here since the beginning of 2022 has been bearish. And they don't last that long from a calendar perspective without a major correction back up bullish. So I kind of feel like we're running out of calendar here. And obviously there could be a new black swan event. It's unprecedented. It never happened before. Yes. Is it likely? Probably not. So I'm watching the calendar and I'm watching the price action, and it'll be interesting to see how that plays out going into the new year. Back to you, Scott.
Yes, sir. Two things I want to hopefully help address for some people that I think might be beneficial, and this stems from a couple of things I've looked at in the past 24 hours or conversations with traders. So I'm going to start with the counter ranges. When we get to the end of, a couple more months from now, we'll be at the end of the year. Can't believe that. Wow.
That's crazy.
Yeah, it really is. So we will do counter ranges at that point for everybody in some capacity. But this is the one I've had marked up. I have fibs marked on this. And again, if you're new to this, I took what in essence was the high of January to the June low, and I haven't modified this since then. And I'm not worried about modifying it right now. I don't want to drive that point home. But the retracements were right back into the 50, what I call the fib zone, between the 38 to the 61.8. In all cases right there. And a nice move. Now, you are trying to have some sort of basing structure on all your major averages. The other thing that you're running into is this divergence. You're at the midpoint of the counter range on the NASDAQ. Okay, and it has been the weakest. Of course, it was the most frothy, if you will, of our indices because it's what's led so much of the market for many, many moons now, right? You see the SPYs, they can't recover their counter range. You can see the small caps, which have been realistically one of the strongest players out there, has held up pretty well, even stronger than the Dow. But the Dow has had a much sharper rebound than its counterparts. My point is, we still don't have agreement, even the counter ranges, that everyone is above water right now. And I'm saying that relative to a level in your counter ranges. And again, the institutions will set these levels, if you will, so to speak, the smart money. And so we get to January, these will recalibrate, they'll reset. Biggest thing is what happens between now and then. Now, granted, as Josh has done, we can pull fibs from high to low and do all that. That's one thing I want to make sure everybody's in the back of your minds right now. I want to change gears for 1 second. So I have lots of scanners. I use TradeStation. I have Radar Screen. I have lots of scanners. And a question came up yesterday to me from somebody that I work personally and privately with. And the question came up, and I know this is not necessarily on topic, but I've seen this a lot, and I would just want to address this really quick, and it made me think of it with the counter ranges. When you're scanning for things, guys, a lot of people, it's like going to Vegas. There's the sounds, there's the lights, it's all this stuff, right? Your brain's having a process. Your brains are designed to basically do three things, and then it's analysis paralysis. Your social security number, your birthday, the day, week, month. There are a lot of things that you have that are three things. They even think about when you were trying to drive a straight shift vehicle, right? Your brain's having to adjust between steering, focusing, shifting, and then the clutch, right? Gas, brake. What are you doing? Trying to pop the clutch in the process, probably. It's not one thing you're doing. There's more like five things you're trying to do. With an automatic transmission, get in the car, steer the wheel, you drive, and it's automatically shift gears for you. A lot of people don't understand when you're scanning for stocks, and I'm talking active, especially more of you who are more active traders, you're asking your brain to assimilate lots of information. So the example I used last night was a scanner that I built for uh, Pivots Radar. This right here, it'll take a second to populate as it comes up for you guys. But there's roughly, 50 symbols on here. There are, 12, I think 18 time frames or something like that. And that's in comparing them. So you have like 600 potential things you're looking at there. Your brain is going to go, ooh, no, stop, plus the color code, plus the squares, rectangles, all the stuff in here. And so I simplified it and said, just look where there's the most green, the most salmon color. The question is, two things I want to drive home before we shift back. I only bring this up because I see traders often in the 20 years I've been helping people that get stuck scanning. I'm not anti-scanning by any means. Almost every workspace I have has a radar screen to go with it. So that should tell you I'm not anti-scanning. But I think if you're trying to learn to crawl before you walk, before you go do an Ironman, I think you need to keep it pretty simple in your head for a second. So when I look at this, I want to look for the ones that have the largest amount of green on the screen or the most salmon color. And then there's a process I would use to trade that. Now, you can either stare at this and your brain is being distracted all day long. And this gets back to what Josh is showing y'all. So this is what kind of brought me into wanting to talk about this for 1 second. He mentioned analysis paralysis. Most you look at this, your brain's going to go, what am I doing? Well, that is part of framing before you go to then finish analyzing and trade. It's not telling me to buy or sell. So do you want to look at that? Or would you prefer to look at, I don't know, just one time frame here? The takeaway I'm trying to drive home, you saw Josh put fibs and he said, I don't want to create analysis paralysis. If you're constantly scanning and you find you're not trading frequently enough because you're so busy going through FOMO, go to one time frame and one chart. Learn to crawl. Play with the fibs that he's showing you. Watch how they interact. Once you get used to this, anybody ever drove a straight shift? What happened is you got older and older. It's like you can dip your chicken nuggets, slip on your Slurpee, Slurpee drink, whatever, right? And you don't think twice about it. But they see a little 15 or 16-year-old kid today if they were trying to do something going, because they're not comfortable. And my point is, Josh is showing y'all with the fibs a very solid way to look at the market. And some of you go, oh, I can't do all that. You can. But if you're struggling, just do one set of fibs. Better yet, take his chart. Do what would be a long side fib and a short side fib on two charts until your brain can interpret it, is my point. And the last thing I'll add on this, what I have witnessed over 20 years in the public domain of trying to help traders turn their careers or advance their careers is you're so busy trying to do everything, you're doing nothing. You're making the mistake of assuming that movement is achievement, and it's not. And so I stress this because once I saw the fibs and he said them, like, it just triggered in my head. What's easier to look at, this or all that? And immediately your brain's like, are you stupid, Scott? I can't. But you can if you know what you're looking to extract from it, is my point. And there is a logic to that whole pivot stuff we talk about in traction. But if you are at a point in your career where you're struggling, go to one time frame. Yes, I use 12 time frames, but I've been doing this for 4 decades. I'm quite comfortable in what I'm looking for. But if you're just learning to crawl, be patient with yourself. And Josh did a great job with those fibs. And like every class we do with this, he shows you the fibs. But don't let it paralyze you because there's great information he's putting in front of you. So there's that little PSA.
I love it. By the way, so we've got a dozen or so that are in here live. If y'all have a question or stock or something you want us to look at, go ahead and type it in, and I'd be glad to take a look at it. We're gonna have Scott take a look at that. Also, if you're watching on a replay, if you want to type in a question, we'll do our best to come back and circle around and get it on the next video. You can always email us info@tradesmartu.com, and Rebecca is on the other end of that email. She'll be, I'm certain, glad to get us questions as well. I want this to be for you. I know Scott's heart is always to serve at the highest level. So go ahead and get those questions in there. I saw somebody, this is kind of interesting. Somebody tried to like comment bomb or spam us. It was some weird thing. I think I got them banned, and their things have probably disappeared by now. Let's see. I see Ken's comment, but I can't publish it now. What's right? What's wrong? Oh, I see. Watch this. Boom. There. Ken's famous, except it's over my head. I'm still learning all this. All right. With that said, also, if I didn't say it, I forget if I did or not, be sure to like and subscribe to the video. It really does help us out. I know it's the conventional thing every YouTuber says, but let's say it this way. If you feel like, if you've learned one thing or had an insight you wouldn't have had without this show, the best way that you could repay that or pay it forward is by liking this video. So if that's, it doesn't cost you anything, but it really helps us get the message out there a lot more. So take a quick moment and do that if you would. And I just like, I can see on my screen all the little thumbs ups go up during the broadcast. So that's kind of cool. All right. Cool. So Scott talks about scanning. Let me show you guys one of the easiest scans that I use. First of all, every scan is its foundation, in my opinion. Should have 1 million shares or greater at its bedrock. I just don't even look at stocks that are trading less than 1 million shares on a rolling 10-day average. So that's an average of 1 million shares per day divided into 10 days. I hope that made sense. And then stochastic, man, is my jam. And Scott can make fun of me for using indicators. It's okay. I got thick skin. Done pretty well without him in my life for 39 years until I met him. Here's my opinion on indicators. They can, if you understand them and what causes them to move, they can allow you to find stocks in certain states, certain conditions. And this is a great example. Stochastic crossing down over 80. To get there, that means that the stock had to have been either in an uptrend or at the very least a sideways move and has recently started back down. Well, that might work out really nicely since our market is in the big red box. We kind of have this bearish bias. Let me find a stock that's traded up to resistance and coming down, and the best way I can find that is by looking at stochastic. If you wanted to augment this, you could come on down here. This is all in TradingView, by the way, to moving averages. And this isn't nearly as powerful as Scott's scanner or even what you can do in Thinkorswim, but it's free. So that's why I do this for those of you guys that are cheap. God bless you. I just want to say, if you're using trading to make like thousands of dollars a year, you should probably, upgrade to the more beefy package. But nonetheless, I actually don't know what this moving average rating thing was that I was just on. Shoot, I lost it. Where'd it go? Moving average rating. What does this say? Oh, that's some, yeah, not worried about that. All right, where are you? Moving averages. All right, Expo simples. Okay, so we could say we want to see the simple moving average is below the simple. The 100 simple is below the 200. How does that happen? Well, the stock is trending down over a long period of time such that the 100 is crossed down below the 200. So here's Amazon pulled up top of chart here. If we come over the moving averages, you can see the blue line 100 simple is below the red line 200 simple. And yes, I would agree, Amazon has been trending down. Then we can flip over to stochastic. Stochastic also recently shot down through 80, but we've got earnings coming out this evening. So I don't know that this would be a great one to trade. However, you can see in the cycle here, oops, my tablet died. Let me get that going again. In the cycle here of the ebbs and flows down, we could be rolling over and heading on lower. I don't think that's the best bearish trade setup I've ever seen, but we're kind of getting in the vicinity of. Let's go over to Intel. Intel, look at that. You could just like shoot a rubber band all the way down that bearish trend that's been happening there. Again, earnings coming out, so maybe not a great one this evening to look at, but definitely, strongly bearish in terms of the trend, and has just completed or is just looks to be completing the end of a little bullish retracement. Here's Chubb. Is this Chubb like the swim shorts? Please tell me they're not a publicly traded company.
That is a insurance company. It's been around for a long time. They used to sponsor lots of stuff where I live.
I was like, there's no way those millennial shorts can be a publicly traded company.
No, that's an insurance company.
Yep, property casualty insurance. All right, there you go. So they had a pretty big earnings gap up. They shot up yesterday and then dropped like a rock. And look at where they shot up to, right at a resistance level here. I suppose maybe they could have gone a little higher. Let's see where they did stop. I mean, to quote the great Scott Landers, price has memory. There's just a lot of resistance in and through that blue line, and again, stochastic crossing down through 80. So that's how I go about looking for trades. Micron Technologies, another great, but look at that. That may be an interesting stock to look at. Bearish trending stock. Looks like we had a trade on that here a few months ago. Played out nicely. I like Micron just from a surface level. Let's just take another peek. Expos or simples. Look at that. Look at that. Bouncing right off the 100. Expos sideways. Not helpful. Stochastics we look at going on down. Okay, now here's an issue. Let me just give you a little analysis paralysis. That's bullish divergence. So that would disqualify it from me. No go. Moving on. I was trying to find something for y'all, but that's how I do scans. If you guys want some insights on something like that. I forgot how we got to that. You started talking about scanning, and one thing led to another. I think you were talking about scanning, and then I started scanning, and then you were like, back to you, Josh.
Yeah.
Here we are. I did have something else to say, but I don't remember what it is. So if you've got something, you can talk, Scott, and I'll think of what I was going to say.
I love it. That's awesome. Josh made a good point, though, with the scanning. This is like a first step in your process. And a lot of people think the scanning aspect is immediately supposed to have you buy. Now, that might be the case depending on what tools you're using. But he's doing a great job right now of walking you through opportunities with this. I think one of the things I've noticed with people when it comes to scanning is they want the scan to tell them it's time to buy or sell. And I would suggest you look at the scan and it's saying, look, you're at this place on the chart. Now do a little more due diligence and figure out what you want to do from there, right? Is it long? And a lot of times, if you're patient, especially if you have that confluence of things coming together, just like right now on the S&P on a weekly chart, you've had 3 waves down, right? And you can see this long-term channel got marked and all that cool stuff with it. And you can see it's starting to struggle again. Again, too much, too far, too fast. We talk about this all the time in traction pro, slope, all that. Now we're trying to get back out of it. At some point, you will get another pullback, and then we will deal with that then at that point. Okay? Trading, as complicated as we as adults especially can make this, even last night, I've posted this for the group. Where do I have this? This is Bitcoin. And that is one of the shadow channels I did for a client last night, and I posted for them, and it's doing exactly what we expect, like the learning traction. But until Bitcoin can get through this high side green line, it's not going appreciably what I call trend higher. Okay, it's just stuck in that. And so until that shifts out of that gear, nothing's going to change it. That doesn't mean there's not great trades back and forth between now and then. You'll see the precision in which price continues to hit different points that we would expect to see reactions to along the way. This is actually, like I said, done last night. Actually, before that drop is when we're marking it right here. And of course, it's doing what it should do here. We've seen this through Traction Group. Again, at some point, get out of that, and they'll hopefully try to trend higher if you want to be long Bitcoin. but I'm not scanning for that. I am being discretionary in it. And I want to just make one more point here with this. A lot of traders, when you are looking to take advantage of the market, they've got Sky at TSU that Josh and his sons put together, um, that does a really good job of helping you identify opportunity. Again, it's putting you in front of the opportunity. Question is, what do you want to do with the opportunity? If you want to get random results, you're going to trade more random. We can flip quarters and do that all day. I'm looking to be very precision in how I'm going at things. I don't get into in here how we do all this particular setup, but once you see it, whether it's this or anything else, whether you're scanning or whether you're marking a chart discretionarily, a lot of you are looking for opportunity through a scanner to put in front of you of an opportunity that you want to analyze a little deeper and then execute from. That's what I want to drive home on top of everything else today. I see people just want to be told what to do. I'm not against that. But then what happens if your scanner stops telling you what to do? What happens if the person in your call room retires or gets sick and chooses not to do whatever they've been doing? I've watched that literally 3 times, I guess, now in my career of almost 40 years. Now your meal ticket's gone. And the way I approach things is teach you how to read the most basic elementary stuff in the marketplace. I don't mean a moving average either, so that you're equipping yourselves for success long term. Anybody who's been through traction can probably tell you I hammer these points. I'm not anti-moving averages. I'm not anti-scanning. Again, I've shown you what some of the examples I have. But I find most retail traders are so distracted. That's what Josh triggered in me. And my mindset with this was, if you're struggling, go to one time frame. Take that scanner. What of that scanner fits with your personality, and then trade from there, if that makes sense. So, food for thought there. I hope that's helpful for everybody.
It's so good. I'm going to come back to just us on the screens here. We've got a couple minutes left. I've always got a hard cut at noon. One, to save you guys from us just talking all day. Two, I've got appointments that I run kids around to on Thursday.
Mm-hmm.
And I think that, it's important to remember the work-life balance, which I think is a myth. There is no work-life balance. It's life. And in some of my life, I work, and some of my life, I'm daddy to my kids. And, every now and then we have to readjust. But, there's some non-negotiables out there. And Thursday afternoons are one of those. So if you have any questions, type them in, and we'll answer them in the last couple minutes here. If we don't see any questions come in, we can wrap it up, because I hate to open up a whole new can of worms. I'll just say I've been kind of watching Apple as we've been talking here. I know their earnings are coming out this evening. But for those of you guys looking for some fast trades, could be interesting on Apple. Mm-hmm. Hey, there's the space bar. I think, Josiah, that's the coolest name of a YouTube channel. He goes and modifies keyboards. He modified my keyboard. I'll show you. There's my.
Did he really?
He's like, you all can't tell, but it's this like clickety glorious thing. And so anyway, he posts videos of him modding keyboards and calls it the space bar. Josiah had a tough week of trading this week, and so he's learning a little bit about stop placement, and but don't give up, buddy.
Oh,
it was. I don't think he was expecting the bounce. I mean, nobody was expecting the bounce, really. So, but I'll brag on Josiah and Caden too. But Josiah's in here. He honored his stops. He position sized perfectly. And, at the end of the day, he only lost a couple R total, which for him represents 2% of his account. No big deal, I encouraged him, and this maybe is good for some of you guys as well. He's just taking the rest of the week off. Like, just don't go chasing money. No good comes from chasing money in the stock market. Just couple trades went against him, and he was bummed out. And so we're going to just take the rest of the week off, and we'll start up again on Monday.
3 strikes out.
Alexandru. Very cool name. Thank you, guys. Could you please look at Tesla and Coinbase? I can look at Tesla.
Yep.
Let me pull that up here. So Tesla's been wild, and I have to state my biases on this because I was in a Tesla trade that did. I gotta think about this now. I had one that went against me, and then I had one I just closed yesterday profitably. So I've kind of been in the Tesla whipsaw. In fact, you can see my stop in here. I'm actually out of this trade now at this point. But I think Tesla and one other stock are in this interesting, like, expanding wedge, which is the most difficult pattern to trade. Can you see that? So it's making higher highs and lower lows. It's like the volatility is increasing. It's a very unusual pattern. And you probably should take a screenshot and put it in your technical analysis book because they don't happen all that often. I advise people not to trade these because you don't know, like, are we starting this new uptrend? Are we going to actually start a longer wave down? These expanding wedges don't usually last that long. I mean, they just can't last that long. So that's a big picture perspective on Tesla. If we drill down a little bit more here, let's go through our indicators first of all. Tesla moving averages generally slightly bearish. Expos, you're sitting right on the 20 period, the blue 20 period exponential moving average right now. Volume increasing as price action was falling, so that is in agreement with the falling price. One of the things, and this is why I got in bullish on Tesla, it stayed oversold for an extraordinary amount of time. It just does not happen. There was once back here, but it even then it poked its head up from oversold levels. Tesla doesn't stay oversold that long, and this huge trough that we cut below the 20 is why I got into it bullish. But now you can see we're coming back up and approaching 80 again. And, whether it looks like that or whether we get up to 80 and start just going sideways, which happens in a bullish market, I'm not sure which one it's going to be. But that opportunity to enter a trade has now passed on the stochastic. MACD is trending lower, so there's no divergence on MACD. RSI, no divergence there, nothing of interest. Bollinger Bands this is ironic. The Bollinger Bands are actually consolidating even though the volatility is expanding. So I would put that in interesting, but not helpful probably. And that's it for all those. So I just exited my Tesla trade yesterday, actually around where the top tick was yesterday. I could have got a little bit more if I got into it or if I stayed into it through today. But I just wasn't trusting it. And actually at the time, I was looking at this resistance coming through there. And I was like, time to exit. So I don't know if that helps you out looking at what my perspective was. If I drill down to a 15-minute chart, I think it looks like there's a lot of congestion in there. There's your range, and something needs to give. We're 2 days in or day and a half into that sideways move. So that's my perspective on Tesla. Do you have anything different that you want to add? You have such unique ways of looking at stuff, Scott, than I do.
Yeah, this is what I call teardrop formation on the daily, and it's something I teach actually with, especially in the Traction Pro side of things. We talk about this based off regression, and so for me, I been looking for this about 4 days ago, coming up and out for the turn, because the way it's signaled, and it's done exactly what you'd expect it to do, moving up. And it is trying to clearly move higher, but it's been trying to turn. And I'm putting trend lines on here, trying to show people kind of how this thing is breaking down a little bit. And I don't mean breaking down in price currently. I'm talking like how they oscillate this thing to try to start turning it. And of course, that's when I start looking at this last little bit right here to then try to pull this thing back around. And it's called a teardrop formation. And maybe, I know we're running short on time, maybe down the road I can try to at least show that for people in a little different way. So it's trying to turn up and out. When you get these teardrops, the only way to explain this for people, because we just really don't have time to get into this session, maybe next time, is you really are trying to pull back almost like a cross thread, if you will, back into something prior that's actually already tried to turn. And it's hard to demonstrate with trend lines sometimes. So there's that piece. I know they asked about Coinbase. Just for what it's worth with Coin, this is sitting, and in Pro we've actually looked at this. This is sitting roughly forgive me, somewhere right in here was the downside measure target. There's actually two targets, one right here and one, I think, roughly right about there. Forgive me because I don't have it mapped out for you guys. I bring this to your attention for one reason. With the most recent slope down, okay, the most recent slope down, unless you have some opinion that makes you think there's going to be some sort of news that just makes this thing go vertical up, and if it does, it becomes unsustainable on the long side. This thing needs more time to base out on a longer term scenario. If you're short term trading it, then just take advantage of the fact that this is trying, again, you see it trying to trade back over itself, which is a no-no. It's not supposed to do that. It will do it, but it's a heads up. So you can see how this is scalloping here, here, and here. It's not right or wrong. It's just what it's doing. We want to see things as they really are and not try to have too much of an opinion a lot of times as traders. So if it continues to move higher up and out of this, then you can already see where this has already kind of run into some short-term resistance. At some point, it's going to get out of this last channel, right? We know that. Once it does, then you'll make your decision of how you want to proceed, whether it's a long side or short side. On a more macro basis, I want this to consolidate a lot longer. Last thing I'll add, if I teach a concept called IPOs, and I bring this up because I taught this probably 2014, I guess. And I bring it up because these are the kind of stocks, you'll have a few of these out here like coin that are really long-term macro base, like really long-term. If this thing does survive, no matter what your opinions of crypto and Bitcoin, all that, okay, blockchain, if this company, quote, survives long-term, then this is something from a longer-term perspective, again, not buy, sell, hold advice, that would fit within that category of something we have much longer-term play. That does not mean I have any interest in owning it this moment. So we're all clear on that. But I am trying to tell you in longer term, and the target is the IPO high. If the stocks that survive stuff like this, it's an easy target. And not only that, I know we got to wrap this up, but it's not hard to figure out. There's the midpoint. That midpoint also lines up very nicely at the bottom of those bodies, and this is like, I don't know, 245 or where the number is right here. I bring it up because it makes some simple targets on long term. But ultimately, if coin does survive, the longer-term macro play is back to the all-time high. Please do not go out and buy it because I just said that. There's a whole structure in my head of IPOs. But on a long-term basis, it is fascinating when people are looking for really long-term trades, and the stock's never gone back to its IPO high. It makes the assumption they're not going out of business. No matter what your opinion of all that in crypto and Bitcoin, don't come at me. I'm just trying to tell y'all. That logic has nothing to do with Bitcoin or whether it was Citigroup or Apple one day. But it's a very powerful way for longer term plays. So if you're an investor, it's something to put in the back of your head. Hope that helps.
And my opinion on that is I don't trade IPOs. And it's an unpopular opinion probably because they can be fun and exciting. And this has no judgment. And others do trade IPOs and do a great job. But my opinion has always been, why make the game more difficult on myself? Like, it's just so much easier when you have more data, support resistance points. You can see how the stock has behaved over time. So, that may just be the freedom that you need to say, I'm going to pass on coin and go find, something else that's more predictable, I guess, if I can use that term, or more stabilized, I guess is maybe a better term. Mm-hmm. Because it's really, I feel like if we had dials here and, we're turning different things up and down, I think what you're cranking up on that is uncertainty. So what you also need to crank up is your risk management and make sure that you're accounting for mentally what the uncertainty is in, having a lack of data and experience.
Yep. Agreed.
All right, guys. Well, let's go ahead and crank up the theme song here. I think we're going to shut this one down. If you have questions, comments, other things you'd like to discuss, email us info@tradesmartu.com. Keep your eyes posted. We're going to be doing some very cool stuff in the next couple weeks. I'm excited to share with you all. If you're on our email list, you'll be the first ones to find out about it. Scott, I'm so grateful for you, brother. Thanks for taking every Thursday and sitting around and talking trading with me and with the whole world. I'll give you the last word today, brother.
Appreciate y'all. Have a great week ahead or great weekend ahead. See y'all next Thursday. Bye.